The second quarter of 2021 was a strong quarter for real estate equity markets globally, with the US real estate sector leading other markets, as was the case in the first quarter of this year. This strong positive equity market movement continues to be supported by the very encouraging momentum that we are seeing in the rollout of vaccines globally and the associated recovery in economic activity as global economies gradually start to reopen. We think that this has resulted in a rebound in global inflation as consumers resumed with their spending patterns. The impact of this rising inflation in the US in particular supported the positive investor sentiment towards the real estate sector during the quarter, as US REITs have historically done well during periods where inflation was below trend and rising or above trend and rising. As a result, the US real estate sector delivered one of its best starts to the year in 2021, with the asset class returning 21% year to date. Locally, the South African listed property sector continued to post a decent recovery in the second quarter of the year, following very depressed levels which we saw throughout 2020. For the quarter ending June 2021, the listed property sector returned 12%, which brings total returns for the 6 months ending June to around 19%. We think that the extent of the rally in the South African listed property sector in the second quarter is best illustrated by looking at the sector's performance relative to other asset classes. Over the period, the listed property sector has outperformed nominal bonds, ILBs, and equities by a wide margin. The outperformance against nominal bonds was 5%, against ILBs 9%, and lastly, listed property outperformed equities by 14%. Looking at how our portfolios performed during the quarter, the Momentum Real Growth Property Fund delivered returns of 12.5%, also outperforming its benchmark. At a portfolio level, we maintain a very cautious approach in how we manage the portfolio, given the weakness that we see in the South African economy and how we expect that weakness to affect some of the REITs. As such, we continue to position the portfolio towards companies that are geared to weather the weak South African real estate markets better. The investment focus for the team remains on investing in businesses with strong demand and supply fundamentals. And we believe that the team's approach of investing in the right company at the right price will ensure that we create value for investors in the long run. That's it from us today. Stay well.